Hello everyone and welcome to this morning's London Forex webinar. Apologies, started a few minutes later than we anticipated, just sorting ourselves out with charts and the usual sort of a technical check so that the webinar can proceed smoothly. But as always, before we do go to the charts and see what's happening this morning, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, I know we have lots of you who come along to this session. Some of you have our quantum indicators, some of you are on the Forex program, and some of you may have read the books that are on Amazon, and some of you I know that don't fit into any of those categories. So for the benefit of those who don't fit into any of those categories, very quickly, what we're going to do is obviously we're going to look at the charts, we're going to look at the Forex market, and from a technical point of view, we're going to look at the charts through the prism of what David is my husband who's sitting behind me, describe as volume price analysis. And it's really looking at the price action and the volume. When we look at volume as an indicator to help validate, confirm the move that we see in progress on the chart. I mean, that's all as traders we want to know. We want to have some idea in this dreadfully uncertain world that we live at the moment is, try and anticipate what is likely to happen next. And that is what VPA does for you. But with the way we look at the Forex market, it's not just from a technical perspective. It's not just chart reading, although chart reading is hugely important. We also look at what's happening on the fundamental side, what are the news releases, and we also look at related markets, because the four capital markets, which are the Forex market, commodities, bonds and equities, they all interrelate, they all kind of bounce off each other, and we have to do a little bit of cross-market analysis for sentiment, because sentiment is what can drive the price action in certain currencies and currency pairs. And this cross-market analysis, not just, as I said, for sentiment, but it gives us a global picture of what is happening in the market. The markets are driven by, and people call it fear and greed, complacency, or euphoria. And given what is happening, obviously, with the virus and the pandemic, markets have never been more, in one way, more fragile, and in another, obviously very volatile. They're very quiet at the moment because everyone is waiting for the FOMC, which happens later today. Now, what we've done, those of you, as I said, who are on the program, who have the indicators will know that, as well as the books and the methodology, the analysis that I post up on my blog and the various social media channels that I support, we also have developed some very specific indicators to help us make sense of what is happening in the Forex market, not just to see where the money is flowing. Is it flowing into risk currencies or safe haven currencies? But they also help us to give us heads up of a quick heads up on potential trading opportunities. Now, some of you may have decided that you'd like to focus on specific pairs, specific currencies, and the indicators help with us as well, because as we'll show you, particularly with the currency strength indicator, which is this indicator over here on the left, where how these lines are moving, what they're actually doing in the different time frames, can tell you an awful lot of what you can expect to see on your chart. So, for example, if you like to trade the British pound but only restrict yourself to maybe 2 or 3 pairs of the British pound, we could, you'll see, is it buying? Are they buying? Is the market buying the British pound? Is it selling the British pound? What is it? Is it selling and buying in my particular pair? Is there a reason for that? Is it to do with fundamentals? Is it to do with sentiment? Is it etc. It's just a sort of a quick a very quick and instant insight into what is happening with what we call currency flows. And from there, we go to the chart and we then look at levels, and then we apply the various principles of volume price analysis. And just a quick recap, what is right? I said it's price action, it's volume, it's candles, it's candle patterns, and of course, support and resistance, and of course, time. So let's close that down. Let's close that one. Let's have some charts up at the moment. But last thing before we look at the charts, let's have a look what's actually going on today. Well, as I've mentioned, there's only one game in town, as they say, and that is the FOMC, which is not until this evening, our time, but markets are already, I don't think there's, I think David's been having a look at the indices and just having a quick look around. There's really not an awful lot going around, waiting to see what the Fed are going to say. I mean, clearly there's not going to be an increase in interest rates. In fact, yesterday there was a Fed announcement. This is actually a two-day meeting. We sometimes forget that. We talk about the FOMC and we say, oh, it's a Wednesday, but actually it's over a two-day meeting. They meet on the Tuesday, and what they announced was that their lending program, their support program for companies in the US has been extended to the end of the year. Now that's not that doesn't bode well for what they think is happening to the US economy. And tomorrow, just to look ahead, what we have to do with the US is we actually have the advanced GDP release, and as we can see here, the forecast is for minus almost 35%, which is unheard of. And I suppose if you want to sum up what the market is looking at, what is what is the market mood at the moment, what is the sort of overall situation, you could say it's at the moment it's the Fed, it's obviously the virus. Talk of vaccines has kind of drifted away slightly. We keep getting releases from the various companies working on it. Market kind of says, oh great, but then it's all very quiet at the moment. And we have something called the fiscal cliff. And the fiscal cliff, if you've come across this expression, is basically you can look up the definition as well for yourself. It's when you have a set of financial factors that is going to cause the economy to go into a sudden and severe economic decline. And what it is essentially, I think what it all boils down to is to avoid a depression. We've had this event impact the markets, our lives, the virus. We've now seen a V-shaped recovery of sorts, but the virus is still spiking. The US doesn't appear to have it under, certainly not contained it or have it under control. Companies are reporting earnings, they're almost meaningless, they're dreadful. The airlines industry is almost being wiped off the face of the earth. I think Boeing and Airbus are supposed to be reporting this week. I'm not sure if they have already. So it's not a good, it's not a good time. And as well, and on top of that, we also, as we can see here with Donald, we have an election year. I mean, Lord knows what the months leading up to the election, that's the September, October, and then obviously November period, what it is, all I can tell you, it is going to be very, very dramatic, very, very volatile. And what it feels like at the moment, it's a bit like the lull before the storm. So that's where we are at the moment. And of course, with the Fed, the currency in focus is obviously the US dollar. I've got it here on my MT5 platform, and one of the reasons I have MT5 rather than MT4 is because this particular broker, XM, it actually gives me access to the Dixie index, which is the index for the US dollar. Now, the Dixie is based on the futures contract, and the one thing you have to bear in mind about this particular version of the dollar index is that it has a very a large weighting of the euro in the index. In other words, it's over 50%. So in a way, when you're looking at the DXY, and if you haven't got it on your platforms, or you haven't got access to it via your broker, if you go over to investing.com, it's available there. So you can just, investing.com is, by the way, a fantastic resource, and it's one that we recommend to all our students. You can find all sorts of data for markets that, you know, in most cases you would have to pay for this data. The charting is pretty good. There's volume as well, and it helps you keep an eye on those markets that we suggest you know, you should do. One of them is commodities. Obviously, we've got the bond yield. And I had a question actually from one of my students, because depending where you are in the world, I don't know which version of investing.com you have, you know, that comes up immediately. So for example, investing.com is obviously the US version, but you can bring up, it's such a comprehensive resource. You can bring up all sorts of different versions and have info for local markets. There is a UK version. I use the UK version for the volatility data for Forex, but you can choose. But the .com is for the US, because I need to see what the S&P futures are doing. This is the Dow Jones futures. For some reason, they've taken off the NASDAQ, which is slightly annoying. But what I've done is I've simply put it up as an individual chart here, and we can see here it's doing absolutely nothing, and it's in a tiny little slither. And as you can see here, it's actually appeared on the UK version of the site. This little symbol here, you've got a tabs customization. You can click that, so you can actually, if you want ETFs, if you want stocks, if you want cryptos, you've only got 4 tabs. It's up to you. What we suggest is you've got the indices for sentiment, you've got the VIX there, you've got commodities, obviously oil and gold. Gold, it's it's a narrative all of its own, and you've got the bond yields, particularly the 10-year. That's very low. Going down, that's obviously fear. And you've actually got some, I've actually got the Forex ones here at the same time. But to get back to the Dixie, so that's the other place you can look for the Dixie. The Dixie, as I said, this version, if as part of the quantum package, we have actually developed we've got indices for different currencies. We've actually got a US index, we've got a pound index, and a euro index as well. And the way we've constructed them is actually equal weighting, really much more to reflect the Forex market, you know, the pairs that we trade. But anyway, looking at the Dixie, the key level for the Dixie, and I've written about this as well, is on my Forex trading page, and that is this level here, which is 93, 40, 93, 40, 42, 43. As you can see here, this is a support level. I just scrunch that down a bit. Here goes all the way back here to the low of the 2018. It's actually bounced off here. We have congestion over here on here, so it is a strong level, but it's the extent of the fall that we've seen in the US dollar and the speed of this fall, which has meant that to try and go and find a level, some sort of level, we've had to go out onto the slower time frames. How that's been reflected on the CSI. I've got the hourly CSI. The red line is obviously the dollar. We can see these efforts to rise, falling back, efforts to rise, falling back. Where is it falling back to? It keeps falling back to that level. If it breaks that level and goes beyond that level, then, you know, everyone's kind of writing off the dollar once again. You will just have to wait and see what is happening on the charts. At the moment, when you're in this kind of situation, is you just trade what you see on the chart. If there's a trading opportunity, fine. If there isn't, fine. You know, we are in extraordinary times at the moment. But the dollar, and yesterday, with the dollar as well, the currency that was, you know, had a great move yesterday was actually the British pound. And what happens with in the situation where the dollar is, keeps coming against this support level and not really going any further. And yet the majors were moving, in particular the cable was moving. You're having a kind of what's called an asymmetric move. The driver is more on one side. The ideal trade is where you have equal drivers. You've got two equal forces, so you have strong buying in one currency and strong selling in another. That doesn't always happen because of the reasons that I've outlined with the dollar. It's at this key support level and everybody is waiting for the Fed, and you often find that on currency pairs. But when you have a currency as we had yesterday with the pound moving strongly, it was moved very nicely in cable, particularly in the afternoon session. But what happened also is when you have a strong move in the currencies, as I said, such as the British pound, you will find often a great move in one of the cross pairs. And in fact, this was a screenshot that I took yesterday and put up on Facebook, and to explain a little bit about the pound New Zealand, which is perhaps not a pair that you would necessarily consider. Maybe it's because most traders focus on euro dollar and the majors because of the issue of spreads, the cost of the spread. But as we can see here, it's been in a substantial downtrend for some time, but it's also then moved into this period of strong consolidation. As I said in my note up here, this is a great example of Wyckoff's second law, in the sense that the longer a market or instrument is in a consolidation phase, then when you do get the breakout, it will be a very strong breakout. But the interesting thing about this breakout, which is supported on reasonable volume, is you look back across the consolidation, these two candles here are the critical ones, because you have the buying that's coming in under there, under these consecutive hammer candles. There's strong buying, strong support line under here. It's at 1.9, and then you have the break. And it occurred on a day when, as I said, the dollar wasn't going anywhere, but other currencies were. But the best move, the strongest move, was actually, as I said here, in a cross pair. And I've actually got another. Let's have a look here. And what's interesting also, this is where we talk in volume price analysis about flow levels and flow, is in the move higher for the pound New Zealand. It actually paused at what we call the Camarilla R4. This is it's a key level here, and actually congested. This is on the hourly chart. So for the rest of the week, this level here, 94.29, is going to be, as I said, the key level for moving higher. In fact, it hasn't moved higher. It actually has actually retraced since yesterday's move. So it's the dollar, clearly, because of the FOMC, we have that key level on the slower time frames. Levels are always key on slower time frames. They will always trump what is happening in the faster time frames, which is why you must use multiple time frames, which is what we suggest in our program. So we have the Fed, we have the ongoing issue with the virus, we've got the fiscal cliff. All in all, not a great time for any of us at the moment from an economic point of view. So I'm just going to pass over to David. He's been looking at the charts in more detail. I've got some stuff set up on my charts as well. But I'll just move over to David. If you've got any questions, just drop them into the chat box and we'll answer them directly or on air.